traditionally, many of those organizations, they look at optimizing from a quarterly perspective, 90 days perspective. They don't look at externalizing. They externalize everything from all those long-term costs, and it's mostly a quarterly capitalism perspective, over this part of the world. And in your part of the world, it's also traditionally looking at, they're looking at it from a transactional sprint perspective. Versus my book, The Gods Must Be Crazy, I'm proposing, rather than looking at the quarterly 90 days perspective, we need to look at the 90 years, century perspective, especially what the China is doing it. They
Welcome to Sustainability Transformations podcast, where we explore bold ideas to drive positive change for people, the community, and business. Today, we are joined by Saji, a systems thinker and author whose work explores how organizations can move beyond extraction culture and embrace regenerative ways of working. Saji brings a unique lens to the sustainability conversation, connecting mindset, metrics, and governance to show how leaders can rethink success. So the goal or the theme of this conversation is to dive into three powerful themes of diagnosing the quarterly profit mindset that drives over extraction, and then moving from that extraction culture into regenerative systems, and then how to shift the executive mindset and metrics from the EBITDA to the natural capital. And so our goal today is to explore how companies can evolve from a short-term profit pressures to a more long-term value creation that sustains the planet, people, and prosperity. So Saji, thank you so much for joining. What first drew you to examine the culture of that short-term profits and how they link to over extraction?
Thank you, Dr. Enoch. First of all, it's truly an honor to be. I'm a big fan of your podcast.
Thank you.
I was, this is the 50th one, am I right? And so it's truly honored to be the 50th guy.
It's a big
Within 4 months. That is an amazing achievement. This is what you're doing is I'm in the renewable space, for a pretty close to over a decade, starting with some of those, the pioneering in the Sun Edison, with right now with till recently with one of the largest renewable organization, or the second largest alternate investment management firm in this part of the world. And under that one, the smallest portfolio is the renewable space. But I happen to be not in the operational side, more into the financial engineering side of, So some of this I'm sharing over here and want to, based on some of that kind of experience, more from the financial engineering side. I rather put it in from the Gods Must Be Crazy from my book perspective. I'm writing more about the hunter economy, and I'm proposing what you're proposing, the regenerative and farmer kind of, the long-term sustainable solution. That is the topic of this discussion. So it is, we need to look at we need to tend the soil. We need to look at this as a farmer, as a regenerative farmer. We need to look at the soil. We need to look at the ecosystem, which include the people, the communities around it, and the nature itself, rather than looking at a very short-term mentality of hunter mentality, where you're taking a look at it from very short-term, rather than looking at the next kill. Typically, in the hunter kind of mindset, in the financial engineering or that kind of mindset, it is especially in the West, over this part of we're including in your part of the world too, whether it is in the Wall Street or in or London or the financial street. Traditionally, many of those organizations, they look at optimizing from a quarterly perspective, 90 days perspective. They don't look at externalizing. They externalize everything from all those long-term costs, and it's mostly a quarterly capitalism perspective, over this part of the world. And in your part of the world, it's also traditionally looking at, they're looking at it from a transactional sprint perspective. Versus my book, The Gods Must Be Crazy, I'm proposing, rather than looking at the quarterly 90 days perspective, we need to look at the 90 years, century perspective, especially what the China is doing it. They're looking at 2049. The sentinel perspective that they're looking at. And you need to internalize the health of the whole ecosystem, the topic which you are going to discuss about, the whole regenerative system, we need to look at from a farmer perspective. So we need to, rather than looking at from a transactional sprint perspective, we need to look at it. This is a multi-generational marathon perspective, not the short-term sprint perspective. And we need to bring both of them, the hunter and the farmer. They can, in short term, especially the hunter, they can bring deliver the high performance from the quarterly perspective, but they may not survive the desert. They may not, or drought. They may not even survive like the economic tsunami what we experienced in 2008. Many of them went bust. In the COVID kind of scenario, many of those things, may not survive. So yeah, let's get into the details of the regenerative. How we are going to address it. Yeah.
Is there a cultural intrusion, or is there a filtration of maybe the Chinese culture or the culture of the environment, which has led into the culture or the mindset of the just short-term profit making?
The culture wise, but if you look at it back in in my book, I'm referencing to the Roosevelts. The Roosevelts is Theodore Roosevelt in
Yeah, the American
early
president Theodore. Yeah,
1900s, and mid 20 or 1930s onwards.
yeah,
DR, those Roosevelts, they were, in a way, I put it, in a farmer, as a farmer. They were looking at it from the long term. Like the Theodore Roosevelt is the person. He is the reason for all the national parks in this part of the world. Especially, he was an explorer. Unfortunately, he passed away in a very young age. He passed away in the Amazonian forest. So they were looking at it from a long-term perspective, narrative. But lately, especially since 1980s onwards, fortunately, we got in the habit of the cowboy culture, very looking at the hunter culture. Lately, especially with the way I think the Saber and Sox, some of the latelys without some of those changes, they're looking at it from they incentivize. It's again part of the pack problem also. There's a lot of special interest groups over in this part of the world. So they were looking at many of those things from the financial engineering perspective, especially the stock buyback and that kind of everything. The focus shifted, and the activists, especially the financial activists over here, and the private equity kind of players, with all those pressures, they, especially our senior level executives in the organization, the CEOs and the CFOs, they looked at from a very short term perspective. And that you need to also look at the culture over here. The average tenure in this with the CEOs and CFOs, typically they last anywhere from 2 years to 5 years. That's a tenure. Within that time, within the honeymoon period itself, the mandate is to boost the share price, the earnings per share. And they're also paid, their salaries, like typically in the, like you and I, when we are in typically in the organization, our base pay is and the bonus is typically maybe 15 or 20%, depending on the, again, organization, how the organization. But in this kind of typically the senior level executives, their base pay is relatively low. They're incentivized to do the earnings per share, how the stock performance. That is the way they are rewarded as a result. They're looking at from the financial engineering perspective to bring the earnings per share up. That is, unfortunately, it is. I don't want to predict again. This part of the world is in a cowboy culture, but lately, especially the cowboy culture, especially got into the financial side, especially with the lately since 1980 or 2000s onwards.
The ecological cost, the environmental cost,
Mhm.
is becoming clear with climate change, which in the 70s and 80s, it was the ozone layer, which was tackled in some way compared to climate change anyway. Why are some organizations still holding back in changing the short-term mindset to include the long-term impact?
That is an interesting question. Let me put it this way. About 5 years ago, to 21, January, I got into the renewable, as I told you, maybe the biggest renewable firm in this part of the world. Those were the Biden days. Maybe he was a little bit principal, and it was around $2 trillion, pumped into the renewable
Right.
space about 5 years ago,
Okay.
especially in this space. So I was till recently, I was with that client, happily with that client for a long. But now the trend is completely changed. It is completely, the pendulum is swinging in a completely opposite direction. The pendulum is swinging with the new administration. The renewable is a dirty word now. Yeah, unfortunately, you need to look at who is funding all those elections. Like again, what lobby is funding, the new administration and all those things. We need to, again, people are over here. It's again take it tradition. It's not just a business alone. A whole system, including our electoral systems, funded by the very short-term interests, funded by, in a way, it is they're doing. It's not just a corporate self-cannibalism. In a way, we are cannibalizing the whole population. Again, if you look at it, especially this is a season of, if you go to the Florida and the East Coast, this is the hurricane season. We were hit by the calamity of our calamity, but at the end of the day, so this is those kind of external costs. They don't really immediately hit into the balance sheet, but it affects. But nobody want to take a look at it. That kind of, and again, you need to look at which interest is, like the electoral class, or who is paying, funding all those things. So as a result, rather than saving the seeds, corn seeds, for harvesting for for the next season. Unfortunately, we tend to, because many of this, considering the electoral cycle over here, 2.5 years, every 2 years, we tend to have the midterm or the presidential election over in this part of the world. So the horizon is typically 2 years. So they don't want to wait till save the seed for the next harvest, because there's someone else going to be there. The people tend to look at very short term. And as a result, it's not the one example which you gave me is more from the CPG or whatever, like the produce oriented company. And if you take a look at it, let's take a look at the Boeing itself. They spend around $43 trillion on their stock buyback. That as a result, they didn't had enough money to spend on engineering department, on the research and development side, or they cut it to the bone. As a result, ended up in 2 fatal crashes, around over 300 people dying, and the company itself going pretty much under the U.S. government, saved them. So unfortunately, that is we are looking at, if you take a look at it, many of those like the COVID or 2008 financial crisis. So all those things expose, this kind of scenario. Now again, over this part of the world around, I think the good percentage of the companies are owned by the private equity. Typically, traditionally the private equity, like they saddle with the debt. And with the interest rate going up, many of those companies over, in the New York part of the world is also the private equity plays a big role. Many of them are sitting on a huge debt and huge interest rate loans. So many of those companies, especially the banking sector, they're the zombie companies. And, like the 2008 economic tsunami or the COVID kind of crisis is going to, you'll see who is swimming naked at that time, at that kind of environment.
So, what would you define regenerative systems in a corporate context?
In a corporate context, a generative system means coming up with a farmer mentality rather than with a cowboy hunter mentality. Looking at from again, as I mentioned, traditionally with this hunter kind of mentality, they don't take care of the soil, they don't take care of the ecosystem, that include the people, the nature, and the communities they belongs to. As a result, when this kind of disasters hit, whether it's a COVID or 2008 economy, it exposed in that kind of scenario. But there are exceptions. I can give you some good example on being a good regenerative.
Yeah, sure.
Or
Yeah.
the harvest kind of again, the Toyota, one of the best example,
Okay.
especially in 2011 when they were hit by the tsunami. That is when they shifted. Till then, if you look at the many of those, if you're an MBA, a management student, or the many of those, you can see the just in time, still preached as, the business, like the taught in the total quality management, the just in time is, still preached in the management business schools. But they switched to their system to just in case. They built around, again, the farmer kind of regenerative kind of mentality. So they rather than waiting for from the hunter mentality of just barely saving, looking from hunter, kill to kill, they started looking from a perspective rather than saving for the winter. That's it. Another example may be the Patagonia. I think in your part of the world also, they take care of the earth. They look at invest in the organic cotton. Their horizon is it's a more of a based on my understanding, it's more of a traditional Wall Street kind of organization. It is a more of a cooperative model, the employee owned the kind of company. They take care of the people. They look at from a long term regenerative, investing in the organic cottons or organic farm in the farming sector. So another example, I think in your part of the world, is also Costco. Costco is another best example. They take care of their employees. Their employees are taken care of very well. And for unlike the traditional many again the Walmart kind of industries where everything is a short term. In Costco, if you go to the, you can see the difference. I don't know, you have the Sam's Club and that kind of,
Yes,
uh,
I've
you do.
visited Costco many, many times. Yes.
Yeah, again, I need to be careful in naming, But if you can see the difference where when you go to Costco or when you get to that kind of the similar the club environment, the way the employees are very pleasant, they're there to take care of you, and as a result, when you typically go to that kind of clubs, you tend to spend at least couple of $100, even if you don't want that kind of but versus if you go to the competitor, which I named before, you may barely spend, maybe, traditional, $100, So, once you get the customer service, when you make sure that when you see the pleasant people over there, when the people are happy, when you're in that kind of fertile soil in the regenerative environment, the organization lasts long.
Right. That's good. Thanks for sharing that. So we talked about the regenerative. Curious to explore the natural capital. So I came across the natural capital as part of the 5 capitals model. So you have the financial and the manufacturing capital, which is the traditional business finance aspect. But then in the 5 capitals, explore the social capital, human capital, and the natural capital. So again, what is natural capital from a business perspective? How would you describe or how would you introduce natural capital to the corporate sector?
That is a great point. Very, very, very few organizations, except the couple of companies, Patagonias or Toyotas, like again, typically quarterly oriented organizations in this part of the world and your part of the world too. Many of them. So I don't think it's an exception. They strictly look at from the EBITDA perspective, purely from the financial perspective. They don't take care of their soil. They don't, again, they're hunters. They are in it for for a long haul. They are in it for a very short term, just for the kill. As a result, many of these organizations ended up as a road kill. themselves. Like the C-level executives moves, again, the rest of the employees, like again, they become the roadkill, either as the layoff or the undersizing or mergers and acquisition and so on. So let's take a look at how we can measure that kind of scenario, like the natural. You need to take a look at it, especially the natural capital. Especially the water is one of the most precious resource, and many of those, like the energy intensive, even like now, like we are in the AI era. Like we are sitting on in Memphis at the you may know the Elon Musk, his Grok. The biggest computer center, as I think even today, I think the biggest AI computer center is based out of Memphis. Do you know why he chose Memphis?
No, I haven't looked into it. No.
Yeah, a couple of reasons. The one is the energy, but he can get the cheaper energy in other parts of the world also. But this is my own personal analysis. And
Sure.
he could able to get the real estate also. Another, like there were many some cheaper real estate. More than the cheaper real estate, we are sitting in the banks of mighty Mississippi River, the water. We are sitting on the largest freshwater reserve in North America. Period. At least in US, we are sitting on the data centers consume lot of water, so we can't get the water from the cheap water from anywhere else. And again, this is but that kind of cost, it is not captured in the natural, the water availability and all those things. Like the natural, again, the electricity is also cheap. This is not captured anywhere typically in the balance sheet. Another aspect is the human capital. That is also traditionally captured in it is treated as traditionally many of those organizations it is treated as a cost center traditionally. But you need to look at it again. When you're looking at it again, the Toyotas of the organization, they invest in the people. They typically join the organization and they retire in the organization. They're in it they take care of the people. They spend on their training, and they take care of the people. As the cost, as another example I mentioned. It's not just healthcare. They train the people. So another aspect is about the social capital, the Costco's of the world. They take care of the environment around, or the Toyotas of the world. They invest in the community where they. So they take care of the healthy ecosystem around it. The financial part is traditional again, and the hunter kind of mentality that comes on the top. But in the Costco's kind of the world, or the Patagonia's kind of the numbers, the EBITDA comes, especially with the Patagonia's kind of the last. They measure, they take care of the soil. They make sure that they're harvesting not just for they don't eat the seed. First of all, they keep the seeds for the long term harvesting.
That's such a very good example where I like giving examples that people can relate with and is current. And the Grok example shows clearly how the water availability or proximity may not show, correct me if I'm wrong, that may not show in the EBITDA, isn't it?
If I may look at it, next water. I think the solid one of the James Bond movie. It's just, I think maybe a decade ago. It was about the water wars. The water is the most scarce commodity in many parts of Arizona, and like many even in this part of the world also. The Memphis is sitting on the biggest freshwater reserve in the world, but unfortunately nobody recognizes that kind of precious resources till we lose that kind of sources. It's completely underappreciated.
Your book, can you give us 3 actionable advice or hints or steps or tools or recommendations you can give based on these discussions as a takeaway for the listener?
Maybe again, this kind of scenario, you need to look at every customer specific, which organization specific. There is no traditional. Again, I'm coming from the management consulting background. Traditionally, we put everything in a cookie cutter, sure. That is maybe the biggest, that is not the right way. In my perspective, again, the God specific crazy, my book perspective, that is not the right way to approach it. But overall, in the broader term, I can give a couple of different, 2-3 different solution. We need to, along with, along with, again, traditionally, most of these organizations are measured in terms of EBITDA, it's especially the CFOs and the CEOs, the C-level executives. But they need to keep a second ledger. They need to keep a ledger which addresses some of the points which you're addressing, the healthcare issues. When you hit with the economic tsunami like the 2008, or when you're hit with the COVID kind of crisis, we're living in a new normal. You don't know what kind of the scenario. We are living in a very fragile environment. Look at the tariff issues and all those geopolitical issues happening. Pretty soon we can have a major crisis out of. Go forward, it's not going to happen. Like the Taiwan is just 100 miles away from the Chinese mainland. If it is hit with a embargo or anything, 90% of the chips are coming from that part of the. What's going to happen to the whole electronic industry? What is going to happen to the whole automotive industry? So you need to look at from the perspective of something happens to the drought or the water issues. You need to plan for that kind of health related. You can see when somebody is swimming naked when the tide goes out. And I'm borrowing from the Warren Buffett.
Warren Buffett, yes.
So you need to rather than the EBITDA and the financials, they put only they throw everything under the closet. All the skeletons under the closet. You need to expose some of those things. You need to keep a second ledger, identifying some of those, the major risk factors in a second ledger. What is going to be the scenario? How you're going to address the healthcare calamity or some of those risk, geopolitical risk factors. That's one aspect. So that you need to identify in a 1 to 4 weeks time frame. If I'm wearing my management consultant's hat. Traditionally we don't get that long horizon in many of in this kind of you need to 1 to 4 weeks. And if somebody is bringing me, I take a look at it. What are your key 5 risk factors identified? In the next phase, if they accept that kind of proposal, in the next phase, I come out with a regenerative pilot proposal. Next, maybe 5 to 8 weeks time frame. I identify rather than going for the big bang approach on the whole organization. Again, that's expensive. Focus on a couple of the business units or maybe one facility or one product line. So address one key supplier, or in your case in the health the care kind of the one scenario. Then we build a relatively smaller team, do a conference room pilot in that kind of environment, and come out with we run that. Then once they see the value, the organization see the value in that one, then get into the buy-in. Once we get the buy-in from the senior level executives, then we get into the full-flown the next phase of even then I go in a phase, this kind of scenario, then like we need to identify the key areas, like we go for the next pilot, next conference room pilot. Take the hybrid agile kind of, this kind of approach, So in short, again, 3 actionable items. The first one is, identify the second ledger, which is not visible on the traditional financial ledger. The second, your risk ledger. Identify the key points in the risk ledger in the short term, 1 to 4 weeks. And once they see the value, the senior ledger, then go for the conference room pilot on regenerative pilot on one of those scenario, one of those business unit or one of the product line or one of the facility or and the third phase, once I see the like the value in that project, once we are successful, then go with the next conference room pilot, but take a much larger project. That is approach I propose. Actionable
Yeah,
steps I propose.
that's good. So what is your parting message, Saji, for the listeners? Now that you've given the recommendations, what is your final thought for the listeners, please?
My final thought, especially with the geopolitical challenges which we are having, especially in Europe. Fortunately, in this part of the world, we have relatively two weak neighbors surrounded by the other side, two sides surrounded by oceans, and we are in a way we are in energy exporting, like again, even then there are a lot of challenges going to come from east, especially from the Middle Kingdom. We're going to have a lot of challenges, especially for Europeans and the rest of the world also. We're not lucky as the energy with the energy resources, self-sustaining resources. Don't be a roadkill. Don't wait till the tide goes out, till you see who is swimming naked. So identify your skeletons in your closet before it is too late. Identify your risk factors. Look at from don't eat your own seeds. Hold that seeds for the next harvest, for planting for the next harvest. If you eat your corns, if you're the which is kept for harvest, you won't be there the next. If you're waiting for 100 to 100 mentality, for you're waiting for the next kill, if something God forbid and a drought happens, or your next kill may not be there. So how are we going to survive? So don't be a roadkill. So try to be look at a renaissance, from my bookish perspective, be a look at Rooseveltian Renaissance, be a farmer, look for a regenerative kind of, you take care of your soil, take care of your environment. Don't be a roadkill. That is.
Thank you, Saji, for sharing such deep and practical insights. And to our listeners, thank you for joining us on this journey. If you found value in today's conversation, please subscribe, share this episode, and leave us a review. And your support really helps us bring in different great voices that show how sustainability can move from just ambition to accountable action. So, Saji, if listeners want to find more of your work or want to get in contact, what is the best contacts for you, please?
Maybe the first, I want to thank you for being, I think, the 50th guest in your amazing platform. You don't
Thank
see
you.
this kind of opportunity again, the different perspective, the kind of opportunity. This is the first time I'm coming across. It's truly an honor to be on your platform. And by the
Thank
way,
you.
this is my book. I hope you can
Okay.
see the gods must
Yeah,
be
can
crazy.
see that. Yeah.
You may be familiar with the old 1980s African comedy movie. So it's a South African from the Ulysses, came out. That was the second highest grossing non-Hollywood movie, at least in the 1980s and 1990s. Run in some of the theaters in the California and this part of the world, for years. So I adapted that book I'm from the southwestern side of India, the state called Kerala. That's where we call it affectionately call it as a God's own country. That is where, in short, for the sake of time, that is where that part of the world that's where the first communist government was democratically elected. From that land, from the cradle of communism, I wrote this. This is the second edition of the book. The first edition of the book I wrote back in 2020, in the thick of the COVID, during the Trump 1.0. Everything was messy, and then again, 2/3 of the world was, even at that time with the Belt and Road Initiative, taken over economically colonized by the China. So in that scenario, I wrote this book. In short, this is a second edition with the Trump 2.0 edition, and with all the tariff and the geopolitical, all the economic tsunami, all the low level civil war going on in this part of the world, and in your part of the world is also politically it's no different. So from that perspective, I wrote this book, and if you hope you find some of these discussions as thought provoking, you can find right now this book is available only in Amazon. You can get in, including in the Amazon.uk. You can get it. You can search for the Gods Must Be Crazy 2.0 in the book section. You can find this book, or search with the Saji Madapat, or I use the Tiger Rider also, my earlier as a nickname and a pen name for this book. And they can also find me on LinkedIn. They can search with Saji Madapat. I do have another website, theyan.us. That way also they can contact.
That's good. So I'll put the link of the Amazon book and your LinkedIn profile link in the description so the reader or the listener can click on access easily. So that's good. Thanks, Saji,
If I
once again.
may,
So this is
when you put the ASIN number, because like I assume your audiences are from all around the world, am I right? If you
okay.
put the link, it may be limited to the US or the UK, or I assume the people all around. Mention the ASIN number. So with the ASIN number, they can search for in
That's
the
good.
in
Yeah.
the marketplace. And with the book title also, this is going to be pretty soon. It's already in the Ingram Spark. The Ingram Spark is the largest, the bookseller, print bookseller around the world. It's around already in 40, 50 different platforms. And it is pretty soon it is going to be on the Google and the Cobos. Pretty soon it's going to be available in 50 different platforms in 200 different countries. And the very first edition I translated to 18 different languages. My plan is by the end of the year, professionally translating it. This is it's pretty close to around 200,000 words. It's one of the largest book in Amazon, period. With the number of words wise and the content wise. So pretty soon I'll be translated. It's going to take a little bit time getting it scholarly, professionally translated. It's going to be available in all major languages in the world, which Amazon publishes.
Thanks once again, Saji. This is Sustainability Transformations podcast where we turn big ideas into real change. Until next time, keep pushing for transformation that lasts. Thank you so much.